All right, guys, welcome to the long anticipated video I've been speaking about for a little while. Why the economy looks fucked by Rock Collins. Now, in this video, I'll be covering the bond yield curve. We'll be taking a look at what smart money is doing, having a look at bank debt, taking a look at the real estate market. I'm going to have a look at gold versus S&P and why it's flashing some pretty scary signals. Last but not least, we'll take a look at the Bitcoin market because I know that is what most of you guys are interested in. Now, first and foremost, we need to look at the inverted bond yield curve. Now, this is a really, really strong sign of a recession, guys. It's really not a good thing you want to see. There's a saying in the trading world that you follow the bond traders because they are the smartest money in the market. The people who trade bonds tend to be institutions with billions of dollars. Everyday traders don't usually trade them. So when the bonds are flashing signs, it usually is a leading indicator for what's to come in the economy. So we had a bond yield curve inversion, lasted about 2 years, just over 2 years, I think, and it uninverted in September. Now, when the yield curve uninverts is typically when a recession happens. People get things very confused and they jump on the train early. They say, oh, recession's coming because the bond yield curve inverted. Typically happens after it uninverts. So an inverted yield curve has preceded a recession, every single recession since 1955. Okay, something to keep in mind. And the time between a bond yield curve and a recession can vary. In uninverting a recession can vary between 6 and 24 months. Now, it says it doesn't lead to a recession, but if you take a look at this point down here, it says a prolonged inversion is a more reliable signal of a recession than a brief inversion. Now, the longest inversion in history was from July 2022 to June 2024, which is the yield curve inversion we just came out of. So about 2 years we sat inside of that. And that is a record-breaking amount of time to sit in an inverted bond yield curve. Taking a look at bank debt. US banks have over $500 billion of unrealized losses. Now, keeping in mind that that is 8 times more than the 2008 financial crisis. Right, you can see that is a pretty substantial amount of debt, especially comparatively speaking. Banks not looking too good in the US. Now, on top of that, we've got the real estate cycles. Now, the real estate cycle is a pretty widely known, economic concept that people use, and essentially it covers the fact that the real estate works like any other market. What you guys have to understand is that no market works in a straight line. Things don't just go up forever. All right. I'm not a real estate expert by any means. I'm not a massive property investor, but what I do know is how markets work, and every single market works the same, whether it's houses, gold, Pokemon cards. It all comes down to supply, demand, and human psychology. All right, now, so where are we in the current property cycle? Well, this article is from 2022, and they're talking about, we're in another situation where a house price crash is being talked about, this time due to rapidly rising interest rates, etc. Now, according to the 18-year property cycle, that crash shouldn't happen. We're still 4 years away, according to Fred Harrison. So if you do the math, in 2022, this article is speaking about the 2026 top of the property cycle. And you also need to realize that these things aren't, yield specific. It's usually a 4-year window in which you can expect the housing market to enter into a recession. So what it means is that you want to start observing some signs in the market to see what might be coming. Now, here's some food for thought. All right, in Australia, a lot of the real estate market has been propped up by people borrowing off of equity on pre-existing property growth. Now, we've already seen monthly declines in property value in both Sydney and Brisbane. If you guys living in Australia, you know that this market is insanely overheated. People need to have $300,000 or $400,000 yearly household incomes to be able to buy a house in Sydney. All right, so if we enter into a recession, there are people with 20 plus properties stacked whose mortgages are quickly going to be worth more than their house. That's coupled with thousands of people defaulting on their mortgages and banks selling under market value. So very recently, 8,000 mortgages that defaulted, the banks confiscated their houses and hit the market. So talking, roughly, say, $7 billion worth of property hitting the market all at once. Now, if people start defaulting more, which is likely to happen during an unhealthy economy, then the banks are going to list them houses under market value. Now, if these investors start getting wind of that and start aggressively listing properties at the same time, it's going to be a race to the bottom. Let's take a look at what the smart money is doing. So Jeff Bezos selling $2 billion of Amazon shares. Nvidia's CEO over $700 million in stock. Warren Buffett is in record amounts of cash right now. Warren Buffett, Mr. Patience, Mr. Stay in the market, world's probably most influential investor, is sitting as heavy in cash as he's ever been. Now, looking at this, you can see that Berkshire Hathaway, Warren Buffett's fund, has reduced his overall stake in consumer product stocks by 21%. Very, very substantial reduction in his stocks. Now, what this means is that he's expecting consumer spending to go down, right? He's expecting people to have much less money. Okay. On top of that, he's sold some stocks in Intel. Moving forward, we've got John Paulson dumping 14 million shares of JP Morgan and Chase. Now, a lot of these investors, guys, are heavily dumping bank stocks, heavily dumping stocks in banks. All right, now, if you look at that and couple that with the massive amounts of bank debt we've got, it's not painting a very good picture. So finally, billionaire George Soros recently sold nearly all of his bank stocks, including JP Morgan, Chase, Citigroup, and Goldman Sachs. Now, between the three banks, Soros sold more than 1 million shares. Okay, now let's have a look at some charts and see what we can draw from historical data. Now, what's really important to remember is that money doesn't just disappear, right? It flows into different sectors in the market. So if you have an understanding of those sectors and the way the market works, you can actually use it to your advantage. For us as traders, a recession is actually a really, really good thing. And it's looking incredibly likely that we're going to get one. Right, it's actually an exciting time for traders. It's unfortunate that it isn't for just about everyone else. Okay, so looking back at gold in the 80s, right, we had our previous all-time high up at like $880. Now, it wasn't until 2008 that gold made a new all-time high, right? January 1st, 2008. So let's cross-reference that with the S&P and see what the S&P was doing January 1st, 2008. So if you look here, as gold broke this new all-time high, the S&P proceeded to sell off 60%. Now, the S&P is a collection of the 500 biggest companies in the US and is a very strong indicator of the strength of the economy. All right? So as gold made new all-time highs, the market tanked aggressively. Now, looking back at gold, what have we done recently? Okay, our previous all-time high was here. It's 2100. And about 8 months ago, we made a new all-time high. All right. So seeing gold make an all-time high is a strong reflection of unsurety in the market. Okay. Now, everyone's really excited about this Bitcoin crypto bull run, the 4-year halving cycles, all of this other stuff. You need to keep in mind that Bitcoin has never existed during a recession. All right. There's a lot more macroeconomic factors at play here than a simple halving cycle that everyone is just so excited about. Right now, looking at the volume here on Bitcoin, okay, we really got a big load up here and then very little follow through. Look, this whole move up, where is all the volume coming in? You want to look at MicroStrategy? Right now, MicroStrategy is Michael Saylor's company. As you guys probably know, he's loaded up on substantial amounts of Bitcoin. Now, MicroStrategy has just hit a major 4.23. It is the last fib extension in the entire cycle. It's very, very unlikely to get a continuation from a 4.23 without some kind of a pullback. Okay, so we're at a major level on MicroStrategy. Now, looking at USDT.D. Okay, USDT.D works inverse to crypto. As Tether pushes down, crypto pushes up and vice versa. So as you can see, we've been pushing to the downside on Tether, all right? And this is the crypto rally we've had for the last 1, 2, 3, 4, 5 months, all right? USDT.D trending down. Now, if you look at this volume down here, all right, you can see all this big volume comes in February, March 2021. I don't know, I want to have a look at that. And we can see here, we're seeing the same large volume spikes come in at the lows here. Now, when you see big volume spikes at lows or at the highs, It's a pretty good indication that that's strong money positioning. All right, so what this is telling me is that a lot of money has moved out of Bitcoin and into Tether, or out of crypto and into Tether. All right, this is Tether dominance. So if we look back at last time Tether dominance saw this big spike on BTC, all right, so it was March 2021, so February, March 2021, all right? We look back, 2021, February, March, this is where we're at, okay? It marked the top of the market. The last time we saw the same sort of volume come into USDT.D. Now, am I saying this is the top of the market? It's yet to be seen. All right. Do I think that we're just going to get this big rip-roaring rally while everyone is extremely bullish here on Bitcoin? No, I really don't. Markets do not bottom when everyone is extremely bullish and very one-sided. Markets use retail for liquidity. You need to remember that you are just retail traders are just liquidity for the big boys. They need you on the other side of their trades. They never make the market that easy. All right. And the whole reason for that is because if they want to buy $10 billion worth of Bitcoin, then they need $10 billion worth of sellers. If they want to sell their 10 billion worth of Bitcoin, they need 10 billion worth of buyers. And that's why you see these narratives plastered everywhere by these fucking idiots on Twitter, right? That really have no idea what they're talking about at all. Right? And just driving everyone else into this echo chamber. I mean, the data is there and it doesn't look great. Okay. Like I said, do I think this is the top? I'm still, look, the last time BTC got this top here, this big markup on USDT.D, we got a big sell-off and then a slow corrective move to the upside on BTC. And this is where alt's got a massive rally. So I have not removed that from the table. Now, do I think that's going to happen right now? No, I don't. I don't think Trump coming into a Trump inauguration, when everyone's had all this time to load up, when everyone is extremely bullish, we're going to get this massive, massive rally, not without crushing everyone's hopes and dreams first. That being said, the macro is extremely unhealthy. So if you think that you're going to buy some Bitcoin and it's, now's a great time to buy, it's only ever gone up, it's never come back past previous all-time highs, all this other bullshit, then you're sadly mistaken, all right? We have every chance of entering into a massive recession here, and I've got targets on BTC down at 30K and potentially even lower. All right, it's not a good time for long-term spot holding at the peak of an overheated market when banks have 8 times the debt they had before the last global financial crisis, when all of this shit is going on. All right, now you need to be very, very nimble and careful with your money. So, by all accounts, it looks like the economy is pretty fucked. But what's the solution? Well, look, first of all, I'd like to take this opportunity to let you know that nothing I've said in this video should be constituted as financial advice and should be considered for educational purposes only. But I do not trust the banks. I'm going to be moving majority of my liquidity into physical gold and silver soon. Now, they are heavily propped up. I don't really care if I'm going to lose 10, 15% in the short term on a gold or silver sell-off, because that's a lot better than losing a shitload of money in the banks. There's also bills being passed in 2018 in Australia saying that, can't even remember the organization, but they can essentially use your self-managed super fund to bail the banks out of trouble if they get in trouble. So, I'm taking most of my money and I'll be putting into physical gold and silver. Now, my extremely speculative theory is that the banks and financial system, as we know them, are going to collapse. At which point people will be forced into crypto so that every cent we spend can be tracked on the blockchain. But this isn't going to happen without a massive sell-off first, taking care of all the liquidity below. I'm not going to be looking for long-term holds until the crypto is a scam narrative returns. I will, however, continue capitalizing on the volatility that these market conditions have gifted us. Guys, we trade futures. It gives us the capacity to be nimble with our money. You set aside a little bit of money in a trading account, man, and you can still capitalize on all of these market conditions without having to get balls deep in a spot hold in an extremely overheated market, which is flashing 1,000,001 different recession signals. Now, it's hard to say exactly what's going to happen from here. The market's been overheated for a very, very long time. But what's safe to say is that now is the time to be risk adverse and start looking at an exit strategy. These banks are fucked. They are not in a good place whatsoever. Now, look, for the purpose of this video, I did keep everything very short and sweet, but this really is just scratching the surface. If you want to have a deeper read into this, I'm more than happy to shoot through some references. Just swing me a message. If you guys are already in the Discord, you know that with this volatility, we are getting opportunities arise in the market. We can make money whether it goes up or whether it goes down. So please do not stress too much about what's happening right now. All right. If we're in the market, if we're trading, a recession is probably the best thing to happen to us. It's just unfortunate about the repercussions that it's going to have for our loved ones. So, keep nimble, keep safe. Don't look at your spot holds too hard. You really need to be very risk adverse right now. Any questions, guys? As always, I've got a lot of free content coming on the website, a lot of free content coming for the YouTube, things like that. So like, subscribe, all that other stuff. And I'll talk to you soon.